Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be back.
John, Golden Goliath published an update for its Kwai project today, and the stock slipped further. Is the Pakwash fault devoid of gold?
Jim, I think the market is starting to dread the worst-case outcome that the Pakwash fault has no gold in it whatsoever. Now, there are some pristine gold grains that were recovered on the property through basal till sampling earlier this year, so there is reason to believe that there is some gold there, but the market's thinking maybe they haven't found where the gold is squirreled away. Since starting drilling in mid-September, Golden Goliath has put out 7 press releases describing sericite this, sulfide that, and whatever, quartzite this, and alteration that, for all of those dozen holes. But not once has it ever mentioned visible gold. Now, this type of system is not supposed to have visible gold, although it's in the Red Lake district. It's not the Red Lake style mineralization that has very visible gold, not just little specks here and there. This is like the LP fault system mineralization of Great Bear Resources to the north, where they have similar visuals, but they have the grades from the assays. By now, the company have at least a half dozen holes in from the lab, and they should be putting out at least a batch of the first one saying, okay, here's what we got. The fact that they haven't, despite the market saying, well, please show us that there is gold in this system. We're not expecting a discovery hole yet. I mean, it took Murray Pesum 80 holes at Hemlo to get the discovery hole where you suddenly knew you had the beginnings of a 20 million ounce high-grade discovery. All we want to see is that there is gold in here, and then you and Bob Middleton can figure out Swiss cheesing this and finding out where the really high-grade stuff is. So they put out another press release this morning, and the stock lurched down another few pennies. It's very close at 16 cents. It's very close to the 15 million units done at 15 cents. That probably has another month to go before it is free trading. However, because it was done in tranches, some of it may be coming free trading in the next few weeks. So the stock is also under pressure from that potential time bomb exploding on the market. So the company needs to finally put out some drill results. And they started off in the western part of the property for logistics reasons. It wasn't the best place to start. They didn't have any till samples in that area, so they didn't have any of the gold grain anomaly there. And then they marched east towards Beauregard Lake, basically tracking the Pakwash fault itself. However, the fault itself is not usually the best place to find the mineralization. It's more on displays. So now they've drilled some holes off to the northeast of it where they think they see a cross structure coming through, and they've angled them under the Beauregard Lake, which obviously because it's a lake, it's been recessively eroded by glaciers gouging out. That would be because the rocks are more altered and brittle, and therefore better potential sponges for gold mineralization. And now they're testing the a parallel series of IP anomalies to the south of the Pakwash fault, where they have this other English River garbage rock on top that's not a very good host, but they think it's only a veneer. So they're drilling through that to try and find it. But the market is getting antsy. It wants to see evidence of gold mineralization. We saw something similar with one of our other Discovery Watch companies, Dios Explorations. It had started to creep up 12, 13 cents. And today they put out a press release saying, well, we've got 6 of our dozen holes done, and we have intersected sulfide mineralization. Again, this is the type of system where you do not get visible gold. It's all overburden covered, but they do have some boulders with gold nearby, and they have gold in some gold soil geochem. So we know in that area that they're likely to have some gold in it, but they've been told by the lab it's 50 to 60 days to get any assays, which means the ones they've just submitted now, it'll probably be late December at the earliest. And so the market just says, oh. And meanwhile, in Quebec, everything is shutting down in the response to the COVID surge. When are we ever going to get our results? But it isn't just the little juniors that are suffering as impatient investors wonder, well, when do we get our discovery hole? When do we get our evidence that there is a prize to be found? The whole gold sector is suffering very poorly. In the past 3 weeks, gold producers have done very poorly. Barrick dropped below $32 after reporting fantastic results a couple of weeks that took it back to 38, and now it's below $32. My index of 52 gold producers, it was up 55% earlier this year. Now it's up only 25%. And gold isn't down that much. I mean, gold's still at a level where the producers are going to be raking in money hand over fist. So it's very strange that the equities are being sold off. And we saw something similar in 2011. At the December 2010 was when the gold equities peaked. Gold didn't peak until August 2011, but the equities were already trending down before that. And in 2013, that's when gold finally really broke down and went down to $1,300 and really locked in what became a 10-year bear market. So we're almost seeing that the market's saying, okay, we have a Biden presidency, we have a Republican Senate, we're back where we were at the start of 2011 after the Tea Party took control of the House. They are not going to let Biden do anything that's of a fiscal nature to stimulate the economy. We got this COVID thing resurging, probably more lockdowns and economic slowdown coming. We have nothing being done to help all these people being, out of a job again and stuck at home. So we have an economic slowdown with an austerity type structure in place, and that's not going to be good for gold. So maybe people are preemptively selling the producers. On the other hand, you've got more and more parties saying, with the vaccine, finally, several different groups with 95% effectiveness reports, we will have a vaccine rollout by the middle of next year. We may have to suffer through this winter flu season, which runs from October through April, and just slug it out. But by summer, we will be getting vaccinated, and for 2022, things will be looking up. The COVID situation will be behind us. The economy will start to rebound. Big senior equities are still behaving as if this has already happened, so that they're still trending up. The Dow knocking at 30,000 before always backing up. So all of this is supposed to bring back inflation. It's going to make the U.S. dollar go down because it's not going to be seen as the safe haven that's necessary anymore. When the U.S. dollar goes down, that traditionally helps gold. And of course, if we do start seeing inflation more than this 1.5% to 2% that we have seen, we will start seeing markets look at the price of gold and pushing it higher. So everything argues that things for gold are going to become much more positive, but we're seeing this sell-off in gold producers right now, which is very peculiar, as if before any of that happens, there's going to be another major smackdown in the gold market, and the markets right now are anticipating a physical gold smackdown and trying to get out of the way before it happens.
We'll have more with John Kaiser right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, what caused FPX nickel to jump on heavy volume on Wednesday?
Now, since we last talked about FPX nickel and its Dakar nickel project, which was on October 15th, the company has made two announcements. The first one was on October 21st, where it said we have closed the $4.93 million financing that we did at 55 cents with no warrants. It was originally announced on October 7th as $3.2 million, and they upside it twice in the following days. And at the same time, Peter Bradshaw converted his 3.2 or his $4.3 million loan that he had made to the company into stock at 55 cents. That helped clean up the balance sheet. And but the $4.9 million they raised really isn't as much as the company would have liked to have raised. When they put out their PEA in September for a 120,000 ton per day open pit mine that would operate for 35 years, it had a very impressive NPV of $1.7 billion US dollars using an 8% discount rate, and it had an 18.3% IRR, which is not as high as people would like to see, but for an operation of that scale, that is a reasonable internal rate of return. What the market didn't quite like was that they used $7.75 a pound nickel as their base case price. Nickel was $1 cheaper, $6.75 a pound at the time, but that number they came up with was sort of an average of various analyst forecasts as to what the long-term price for nickel will be based on all their projections of mine shutdowns and mines coming on stream and general demand growth. So that was the first news. They got the money. Martin Turenne, the CEO, says, ultimately we'll need $15 million to deliver a pre-feasibility study by mid-2022. But they can't really go back in there and start working until June. Much of pre-feasibility work is infill drilling to upgrade the resource category. And so the $5 million and cleaning up the balance sheet, it really sets the stage for a bigger financing in the new year to get the rest of the money that they need to deliver the PFS. Now, the second news that they put out was done on November 9th last week. And the market pretty much ignored it, because all the company did was point out that the University of British Columbia and Geoscience BC had released a preliminary report that they called the carbon mineralization potential of ultramafic rocks in British Columbia. And what this report did was it identified that it's the serpentinization of ultramafic rocks that makes them really good at carbon sequestration. And if you take the Dakar rock and finally grind it up, which you have to do to liberate the natural stainless steel that's in there in the form of the mineral awaroite, that leftover tailings will soak up carbon dioxide and sequester it. So the study group led by Dr. Greg Whipple, it looked at the various deposits in British Columbia and came to the conclusion that it's the ultramafic rocks, which they call ophiolites, which is basalt that formed on the seafloor, and as the seafloor spreads away from the spreading center and hits the continent, most of the time it gets subducted and just plain disappears. But sometimes it ends up being shoved up onto the continent and ends up way in there and then ends up getting buried by other things and undergoes a lot of metamorphic pressure. And these ones called ophiolites are the ones that have the best chances of serpentinization, which is caused by this high-pressure metamorphism. This is different from igneous intrusions, ultramafic rocks that come up and that cook for a while, chill out. Nickel sulfides will form in them. Gigametal's Turnagain project in northern British Columbia is like that. The Crawford deposit of Canada Nickel in Ontario is like that. Very low grade. Half the grade is in the olivine lattice, which you can't get out because it's just hopelessly locked up in that. The other half is in the nickel sulfide. But it is this squeezing, this serpentinization, which turns the nickel in the olivine lattice of these ophiolite rocks, such as Dakar, into the awaroite natural stainless steel. And this ability to potentially put away carbon and make a giant mine of 120,000 tons a day, open pit, lots of trucks moving stuff, lots of crushing being done to make it carbon neutral, that's a very positive thing for the whole ESG source certification movement. And that's all about groups like Tesla who are concerned about using clean inputs in their products. They want to know that their nickel is coming from a source that doesn't have a lot of environmental consequences, such as, say, getting nickel from the Norilsk operation in Russia, which is one of the most polluted sites in the world. So this extra information about the carbon capture, it's potentially significant down the road. The other thing that the company's working on is they had Sherritt do some tests last year, which they reported in January, that the concentrate that they're able to make from Dakar, which is a 65% nickel with most of the rest iron in the form of magnetite. This can be fed in directly to the stainless steel mills, but apparently you can also directly make the high purity nickel sulfate that the battery makers need for their lithium ion batteries. So being able to say, hey, this comes direct from mine with a chain of custody, just like with diamonds, where the Kimberley process had to invent it so you could show that these diamonds did not come from some killing fields by some circuitous path. This came directly from, say, the Zhuaneng mine in Botswana. It's clean. It was properly mined. You'll be able to do that with nickel from a project like Dakar. But your question really was, why did the stock move yesterday on Wednesday? And the reason turns out to be that David Forrest of the International Speculator, which is part of the Casey Research Organization, he introduced FPX nickel for the first time to his large subscriber base. And he explained the whole concept of how Tesla's looking for these different nickel sources. He understood the whole carbon capture aspect of it. And so now we saw the market, a very large audience, appreciate that, wow, here is a story that's been largely ignored. It's been an obscure thing that people like John Kaiser have covered for ages, but it's finally taken off. And that lifted the stock from its sort of 55 cents into the sort of 65 cent level, traded over 3.5 million shares. It's dying down a bit today because all these newsletter recommendations, they have a finite audience, and people, those people buy it, and then they sit back, and then you have to wait for another group to discover it. But this is the beginning of eyeballs being put on this on this story. And in the earlier segment, when I talked about Golden Goliath, I mentioned how the market's a little concerned about the implications for gold by a Biden presidency that's at the mercy of a Republican Senate creating an austerity future. Well, one of the things that Biden will still be able to do is shift the focus back to the climate change problem, green energy trends, and the market and industry itself is saying, yes, this has to happen. We don't care what some politicians are saying about this. The electrification of the vehicle industry, it's happening. It's growing quite quickly, more quickly than people had expected. And so there is going to be more and more eyeballs on this whole issue of where do the metals come from that go into technologies that are dealing with climate change, and are those metals themselves and the way they produce, do they contribute to the problem, make it worse rather than better? And an example like FPX nickel with its the car project possibly being carbon neutral, making the nickel in a form that can be directly purchased by an end user to make something like nickel sulfate. These types of stories are going to capture an ever-growing audience, especially as more of these ESG funds attract more capital and start looking for places to put their fund holders' money and see growth happen in it over the next 3 to 4 years.
We'll have more from John Kaiser right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, why was Neo Bay Metals halted this week?
Oh, Jim, we were scratching our heads when it was halted first thing Tuesday morning, because it was not halted Monday morning when they announced really important news, which was that they had negotiated a $10 million financing, a private placement consisting of $7 million at 65-cent warrants and $3 million in flow-through at 68 cents with no warrants. Canaccord and Sprott Capital Partners were going to lead this financing, and this is not the Eric Sprott group. This is the Rick Rule Sprott Capital, which is why, of course, there's a 3-year warrant. Rick doesn't get his 5-year warrants anymore, but he can still make a 3-year warrants requirement. And the strange thing that I heard through the grapevine was that of this $10 million financing, $7 million, up to $7 million, was already spoken for by what's called a president's list. And these are parties, friends of the company, which are on a list that already know they're going to buy. It's what the management would have felt around. Are you interested in doing financing at this price? And most of the time they would just do it directly, and the brokerage firms would not get a commission of that. So if you have 70% of this financing already spoken for, and obviously Osisko Gold Royalties, which is 19.9%, is going to maintain its 19.9%, so it will be a decent piece of that president's list. And so it was no surprise to me that this got upsized, though I'm a little surprised it was only for $2 million, and it was a mere 20% bump in the size of the financing, what was announced Tuesday after halt. So now it's $8 million for the units and $4 million for the flow-through. And, market wasn't particularly excited about the price. The PEA that they put out in October suggested that this, just like the FPX PEA, has a potential to be a 10-bagger over the next few years as it gets walked through the pre-feasibility stage towards feasibility. But they did have a more pressing urgency than FPX Nickel to raise money, because they also need to spend about $15 million in order to deliver a pre-feasibility study in mid 2022. But they need to start drilling in January when that area is frozen. So they needed the money sooner than later. Whereas with the $5 million that FPX raised, that'll take it well into June and give it a cushion so that the street can't grind them down because you have no money. In this case, Niobe was vulnerable to the street pressuring it down. Well, we'll give you nothing. And the problem is you can only rely on retail and friends and associates of the insiders for so long. As soon as you get into the heavy lifting of feasibility demonstration stages where there isn't any, super excitement from drill holes or anything like that, you have to go to the broader financial sector, which means the brokerage industry. So the company had to do that. It's good that they're getting this done. The potential for next year, it sounds like it's, pretty boring. We're going to, do infill drilling. We're going to check out the potential extension of a higher grade structure that rakes to the north, see if we can extend the mine life. The preferred scenario is an open pit scenario. When we last talked about it, I explained how the Moose Cree First Nation might actually prefer a open pit operation to an underground operation because it gives them opportunity to be the owner-operators of the fleet that mines and moves all this material rather than, more complicated equipment that has to go underground in more dangerous conditions. But the other thing that could make this Niobe story quite exciting, and it's also related to the whole green energy electric vehicle story, and that is this battery that Toshiba is working on with partners like Toyota, where they are using a niobium titanium anode within the lithium-ion battery, and this would replace the graphite anode that almost everybody is presently using. And a CBMM representative has suggested that a commercialization decision is quite close, perhaps within the next 6 months. And once this comes out, that will be a big deal for niobium because CBMM has estimated that in 5 years, when this is fully rolled out, it could boost the demand of the niobium market by 30%. And most of it right now is used up as an alloy for lightweighting steel, making it stronger so you can use less of it and therefore not have as heavy steel body of your car or train or whatever to move yourself. So if that comes out, niobium is going to become something that everybody talks about because right now there's only 3 mines. There's the Arasha mine that CBM owns, which right now produces 80%. There's another one in Brazil, and then there's the Niobec mine in Quebec, which is now mining underground after taking it deeper down below sort of 500, 600 meter depth, and it has another sort of 10 plus years of mine life. So 5 years from now, which would be the earliest that a James Bay mine would be fully commissioned, that would be perfect timing for an extra stream such as the 6,500 tons of niobium that this project would produce annually, which is just a small fraction of a total, what is now a $2.5, $3 billion market. When people start to understand the economics of this story and then see the sexiness of, hey, this is part of the whole electrical vehicle movement. I'm not saying it's rational that you should get all hot and bothered about a metal because it's simply related to the electric vehicle industry, but it's a fact the market loves this type of story. That's when you can see something like Niobe taking off next year as we start plodding through the less exciting feasibility demonstration phase of the development cycle.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.